In this special Halloween episode, I spend a few minutes going through the red flags that exist in the financial world in general. And then when one discovers the infinite banking concept, becoming your own banker, I address some of the red flags that are very common that you see and experience there. I had fun. Hope you enjoy listening. Happy Halloween. Welcome to the Bank of Life podcast. I'm your host, James Neathery. So this is a Halloween kind of special because we like to have fun around here, and this is going to be released on the weekend of Halloween. So thanks for listening. We're going to cover some, potential perspective, potential horror stories, red flags in the financial world, from zombie concepts to, brain dead financial advisors without being negative. It's all positive. Love, peace, and chicken grease. Okay. But look, let's just talk about the financial world, in general, right? So we're all taught to work hard, save our money, right? Quote unquote, save our money. And then, of course, pay cash for everything, but then put money into a government qualified plan, an IRA, 401k, 457 plan, whatever, traditional qualified plans. And of course, we have Roth, quote unquote, tax-free Roth IRAs and even Roth 401ks. But let's just walk through that for a minute. Everybody's doing it, so you might as well do it too. So I'm going to work hard. All right. Spend less than I make. That's a solid financial concept, spending less than you make. Now, what I want to question and encourage you to think about is where your money should reside. Should it be into a qualified plan? Should it just automatically go there by default? And maybe so, but let's look at that. If I'm working hard and saving money, quote unquote, number one, an IRA or 401k, the underlying investment most of the time is some kind of a risk, mutual fund, stock, bond, ETFs, EFTs, there's risk involved, right? So that's not savings, that's investing. Let's be clear, savings versus investing, saving for retirement in the market is not savings, it's investing. And okay, maybe we should all have some investments. There's no question about that. You're the best investment that you have. So maybe you should put money, to your own education and to whatever your God-given abilities and talents are. But I digress. Looking at IRAs, 401ks, most of America is separating themselves from that pile of money and they're abdicating their responsibility to some third-party investment advisory firm or person or individual separated by probably several hundred, maybe a couple thousand miles. You're abdicating your responsibility. You're not you personally, but in general, the big us. We're all encouraged to, number one, separate ourselves from our money, put our money into this, and we're savings. No, we're investing. And, we're abdicating our responsibility for the use of that capital, and we're dependent upon them and their outcomes. Well, it might work out. But then, if I access that money prior to 59 and a half, I'm going to pay penalties. And of course, I'm going to, pay ordinary income tax. I'm going to pay ordinary income tax on the money anyway. So is it really a tax break if I get a tax deduction today and I'm just kicking the calculation off some years into the future? I'm going to pay taxes. You're going to pay taxes on the money, or your beneficiaries are going to pay taxes on that money when it comes out. Just saying there may be a better way. If we're separating ourselves from our capital for this time period, because most of America, either most of their wealth resides in qualified retirement plans and or their primary place of residence. So here, if I've separated myself from my capital, now, if I want to purchase things and finance things, and let's be crystal clear, everything you purchase, you finance, you either formally finance with somebody else's capital and you pay for that use, or you pay cash. That's a form of financing. I make a purchase, I pay cash. You're still financing it, right? You finance it with cash. You give up all of the interest you could have otherwise earned. So you're either paying interest or giving up interest. There's no exceptions to that. And it would help you or behoove you to understand that and to not only understand it, but understand how financing, banking can benefit you and your family. Oh, wait, now that's bring up the word banking and financing. You look at all of traditional planning, financial planning, personal financial planning, retirement planning, financial planning, whatever you want to call it, all the terminology that is used to describe this relationship between financial institutions and the all-American consumer, rarely, ever, as a matter of fact, I'm inclined to say never, do they discuss the banking function. That banking function is always left out of the equation. Well, I wonder why. Well, if we consider banking then in controlling the banking function as it relates to you in your life, and that's really my underlying encouragement here, is to get you to consider the fact that you can become your own banker. Just because typical traditional financial planning leaves that out, and I'm just questioning why they do that, doesn't mean that you can't control the banking function in your life. As a matter of fact, you can control the banking function in your life. And when you understand that, and I don't want to say that when you understand that, my encouragement is for you to investigate that idea and that possibility. The benefit to you and your family of controlling the banking function may be bigger than you can imagine. And I think it is more beneficial to you and your family by controlling the banking function compared to a lot of these other brain dead ideas that the financial world wants you to participate in. Now, if we consider the infinite banking concept, or controlling the banking function in our life, our Nelson Nash must come up, because he created the infinite banking concept, right? He wrote the book, Becoming Your Own Banker, the first work in the infinite banking concept, period. And then he wrote that's Becoming Your Own Banker, right? He wrote a second book, Building a Warehouse of Wealth. And then, the Nelson Nash Institute was formed, and there's been some publications come out of there. The one of them is How Privatized Banking Really Works. And then Nelson also recorded, there's a recording, several actually, of Nelson Nash, who's graduated now. He graduated several years ago. But there are recordings of him presenting the infinite banking concept, how to become your own banker. And you can purchase those, it's DVD, or you can purchase access to that series digitally. And I'm saying all that to say this, that those are the first original works. So if you want to explore the idea of becoming your own banker, start with those and stay on those. Don't go out and buy a bunch of ClickFunnels and all kinds of education series without doing that first. Becoming Your Own Banker, Building Your Warehouse of Wealth, How Privatized Banking Really Works, in a 6.5 hour recorded presentation. All right. That, and I think you can get all that done for, $250 with shipping included, and when the reading time and the watching time in about 10 or 15 hours. That's if you're a slow reader and you go through it slowly. Okay. That's a proper vetting of this infinite banking concept. Whatever you see or on the internet, whatever they've called it, renamed it, those are the first works. And that's my encouragement, is for you to go there. Because once you type in the infinite banking concept, Becoming Your Own Banker, all kinds of things come up in Google, especially, the first 4 or 5 are ads. Well, what does that tell you? Those, and I'm a capitalist. I'm okay with ads, but the first 4 or 5 are they're paying for that top position. It's like, wonder why? Because this is a great idea for you to become your own banker. But once you get off into the internet, there's some red flags that you might want to consider. Have these in the back of your mind. Because when you get in there, there's a lot of promoters that use the wrong type of products. Like Universal Life, for example. Oh, well, just because somebody has a life insurance license and they can spell IBC, and there's a permanent policy that has an account value or an internal value that you can collateralize, well, that must be what you use. And it's not. So Nelson discusses Index Universal Life, IUL. What you're looking for, if you want to practice the infinite banking concept, as R. Nelson Nash, the creator, encouraged, you want to use dividend-paying whole life policies issued by mutual companies. So you just want to buy a policy from a mutual life insurance company that pays dividends. Well, before you do that, you should, like I said, go to the first works, the original works. And when you get lost on the internet, and you listen to these people, they talk about IUL and banking and all kinds of different terminology, almost renaming Nelson's work. And then they want to make it better, right? Invariably, they want to make it better. So just some red flags. Number one, any other product other than dividend-paying whole life insurance policies issued by mutual companies. A second really prominent red flag is trying to make it better. This overzealous pick-me-girl marketing. It's like, this is the only way to do it. I discovered this. Can't mention Nelson's name. And that's just one, right? There are several. And the cringy, overly nice, overly marketing kind of persona. Look, if you experience a cringe factor, it's okay, man. It's okay. You're probably right. This annoying pick me, the stalking ads, it's just, there's a better way. It's going to the original sources, understanding the work of Nelson Nash, and to have that solid foundation and then expand from there. You can bypass a lot of this. I've called it noise. I've talked over and over about the noise, but some of the noise is using Universal Life. They can't mention R. Nelson Nash unless it's a cursory, mention, and it's an improvement of Nelson's work. That's a red flag. I'm going to bolt on an improvement. Nelson laid the way, or laid the groundwork, and, now I'm making it better. That's hogwash. Another red flag is all policies must look alike. When there comes to a total premium, the premium that's paid to the life insurance company. There's a base whole life policy. There's just a whole life insurance policy with riders. One of the riders is a PUA rider. The other is either a standalone term rider, or the PUA and the term component is blended. That's called a blended PUA rider. I speak a lot about these different things, but when it comes to PUA, I've done a PUA series. So just, James Neathery on YouTube, my channel, and type in there PUA. And, I've talked quite a bit about it, but all policies needing to look the same because, typically, actually, the PUA, the paid up additions rider, gives you the most liquidity early in a policy. Because there's little to no cash value in whole life insurance within the first 2 years on that base policy. The PUA is added to give you early liquidity. Okay, so here's the red flag. When a policy must look the same, your policy must look like my policy. Like there's a particular, 80% of the premium has to go to the PUA and 20% of the premium has to go to the base, or 15%, 85, or 90, 10. Anytime there's a hard number where everybody looks the same, it's a red flag. There are a lot of different companies that you can practice the infinite banking concept with, good mutual companies, whether they like the idea or the concept or not. And every PUA is a little bit different. Their products are a little bit different. So it's a red flag when all policies must look the same. And it's also a red flag when you got to go jump right to the illustration. We got to get to the illustration as soon as possible. And then we're going to focus on a rate of return, a ROR, or an IRR, an internal rate of return, which is what I prefer. But you're looking at, numbers on a page and trying to solve for the highest rate of return. It's a fallacy. And it's really a continuation of flawed thinking. It's like most of America today is going broke at low interest rates. So is it really about the rate of return? Most of America is going broke at 40 to 50% interest by volume at 3, 4, 5, 6, and 7% by rate. rate versus volume. So whenever you get drug off into illustration land by some financial guru and trying to beat you up with interest rates, it's a red flag, and then also if they drag you off into a great big presentation where, it's like complexity, it's so complex, it must be good. Or they bring in other products, it's like, well, you got to have a HELOC, or you got to have a loan, or you got to go borrow money on your credit card to get the policy started. I'm just saying that's a red flag, right? Maybe the policy's contorted and twisted, which it is if you're at 90-10 or 85-15. It looks good, feels good early on, but there are problems in the future. Or we do 10 times the premium in year one. Let's say I'm going to pay $100,000 premium in year one, $10,000 in premium in year two and beyond. Why? That's short-term thinking. Right? If I can pay $100,000 in premium today, why can't, I'm going to go borrow money, cash out, refi, or whatever. I'm just saying, if there's, all policies must look alike, or there's big premiums in a particular year, all of those things should be red. They are red flags. And I'm going to keep going back to the first works, right? Nelson's book, Becoming Your Own Banker. His first book, his second book, Building a Warehouse of Wealth, the third book written by Carlos Lara and Robert Murphy, PhD economist, How Privatized Banking Really Works. And then right out of the horse's mouth, Nelson Nash delivering a 6.5-hour presentation, right? So if you read that material and watch that video, and then come back and listen to this again, and you'll completely agree with me. It's like, yep, James, those are red flags. Thanks for the direction. You're welcome. Okay, so I want to say that the big premium, the focus on the big premium in year one, right? The focus on the internal rate of return, or an ROR, all of that is a continuation of flawed thinking. And Nelson, I've said it many times, I'm going to say it again over and over. It's simple, but it's very true. 4 fundamentals. Number 1, think long range. Right? Number 2, don't be afraid to capitalize, i.e. pay a premium. Number 3, be an honest banker. If you're going to make loans, make loan repayments. And number 4, don't do business with banks outside of your savings and checking accounts. Then Nelson added a 5th, was rethink your thinking. And I'm bringing those up because they're true and they're simple. Like I said, Nelson said it. All of these red flags are violations of one or all of those 4 fundamentals. If I have to have, 100% equilibrium between total premium and total cash value in year 1, 2, 3, or 4, I'm afraid I can't think long range, number 1. And then number 2, I'm afraid to pay a premium, right? And in my experience, that a continuation of that flawed thinking. If I'm afraid to pay a premium and I'm not able to think long term, I'm going to borrow against every bit of that cash value as soon as I can. And I'm not saying there's anything wrong with that, but the continuation of flawed thinking is, okay, the first thing I'm going to do is not pay a premium, or I'm going to reduce a premium. Then I'm not going to make loan repayments, and then I won't even pay interest on the loans, because actually, yes, you do pay the life insurance company interest when you borrow their money, collateralizing your policy. See how simple that was? And we didn't even have to go through a big, 37 colored financial chart, right? Because this is very, very simple. I'm just saying all of these red flags that I'm bringing up are violations, or they're just not adhering to 4 basic fundamental principles, which of course it bleeds into the 5, because, you've got to rethink your thinking, and it's okay. It's worth the effort of going through that. Maybe you vet this idea of becoming your own banker and you don't see the value, and perfect. Maybe you do. Maybe it changes your life, and maybe it changes the life of generations to come. Yeah, that is possible. I love this idea of complexity too. If I create this big complex, illustration, it gives off the air of superiority because it's complex. It must be good. If it's confusing, then it's a red flag. Right. Bringing in these other products like HELOCs, credit cards, that's all a red flag. Trying to make it better than it is. Like, oh my gosh, another, it's a pick me girl kind of attitude. I got to make this look so good. I got to get right to the illustrations as soon as possible and create these complex, apparently complex presentations. And it's like, now you're doing what the bank can do. You're printing money out of thin air. It's hogwash. Okay. Slow and steady wins a race. Go to the sources, educate yourself, and see if it makes sense to you. I believe it will if you'll give it a fair hearing without preconceived biases. I get it. Who wants to get up and talk about life insurance every day? I get it. Who wants to go through the life insurance buying process and have every life insurance agent that's like looking at you like all thirsty and everything, like, oh my gosh, I get it. But your education is worth it. Okay. Look, the solution though, is to get past, or avoid, right, all that cringy marketing, and go to the sources. Becoming your own banker, building a warehouse of wealth, how privatized banking really works, Nelson's 6.5-hour DVD series. You can either own it or purchase access to it. And then, quite frankly, I'm a little biased, right? This channel is 125, 150 hours, free, no cost, that you can listen to on your own time in the middle of the night. I think we have over 25 or so clients, unpaid clients, that have come on as guests, sharing their experience and their exposure to the infinite banking concept, the mental process that they went through to make a decision to participate or not, and then what they've done. Had a client one not that long ago, about a month or so ago. It's like, James, do you know where the channel is that has all of those universal life clients that have been practicing, with universal life insurance policies for 2 or 3 years? Do you know where that channel is that has all those guests? And I said, no, I don't. He said, yeah, it doesn't exist. I'm like, oh, yeah, thanks for pointing that out. Yeah, I'm just saying, 25 different people, husbands, wives, all walks of life, sharing their experience with the infinite banking concept. That's pretty powerful. So spend some time going through there. Okay. Thanks for listening.
Thank you for joining us on the Banking with Life podcast. If you're watching on YouTube, make sure to like and subscribe and click on that little notification bell. Otherwise, join us on Apple Podcasts and Stitcher for weekly content.